Your biggest fear is that if you control the investment option, you're going to make a mistake and you're going to end up wasting money. Well, we've heard a lot playing on those fears. At the height of the Great Recession, and even afterward, many talking heads were lamenting that the market and derivatives were too hard for the non-economists to understand. I rejected that notion first because that's not a word that's allowed in my household. But secondly, I rejected it because economists understood it. They understood about the market and these derivatives. So if they could understand, I could understand, even if that meant I needed to become an economist. But it doesn't mean that I need to become an economist. I could read what economists read. I can understand that you don't want to waste money. But my challenge to you is to admit that there are some things about this money and market stuff that you don't want to know. Or you don't want to know what's going on with your money. But you may be wasting money because of what you don't know. Let's stop wasting the money. When we apply your investment options to stocks, you realize that stocks are an investment vehicle with risk, yes, but also with a return. Consider what recreation, leisure, and gadgets you may have invested in without a return. And start to recognize that you've identified discretionary income and you're using it in a certain way. I'm just adding here that we could use that discretionary income in other ways that would benefit you and your family long term. here we arrive to adopting a legacy outlook. The big fear here is that you're afraid of not getting your money's worth. You make your money, you work hard to make your money, and you want to use that money to your best advantage. Well, many have the equation in their heads that I give my money and I get things. The funny thing to me, as I've researched economics and economic systems, is that this is not even the most fundamental of transactions, the give money and get something in return. Barter is a much more basic system of economic exchange. Of course, you know barter is where you give something other than money and get value in return. When you expand to money, especially financial constructs like credit, net worth, debt to income ratios, and more, the possibilities expand as well. The bottom line is that you should expect and seek out opportunities to get more than what you put in. In a barter situation, you're going to get something of equal value based on your barter with the other person. For example, what if you bought your groceries at a store using a credit card and you received points at that store's gas station, returning a discount off your next fuel purchase? The credit card you used also gives points for purchases, which you then use to get your ink cartridges for free in an online transaction. You just leveraged and saved money, maybe even made money. But you also saved time. You gained a process and information that you can pass on to the next generation. The value isn't just about now. The value is also in what you've provided for your future and to future generations. Again, two things about applying this legacy mindset to the stock market. Number one, stocks are not your complete financial plan or the complete legacy. The second thing I want you to realize is that a large component of the legacy for future generations is wise resource utilization, understanding how to utilize time, information, people, and money to benefit our community at large and your family in particular.